this afternoon we have the Minister of Trade. As we all know, trade is critical to the growth of a nation's economy. It plays a crucial role in reducing poverty as it directly affects the levels of income and employment of citizens. Recognizing this, the government of Sierra Leone has made the promotion of trade and industry a core priority in this government's New Direction agenda and the country's national medium-term national development plan. Therefore, several initiatives and activities have been launched and implemented by the Ministry of Trade and Industry to enhance the gains from trade amidst COVID-19. To explain more on how the Ministry is mitigating the current challenges of COVID-19 regulations that were announced last week to enhance its mandate, we have the Minister of Trade, like I mentioned, Dr. Hinga Sandi, and this team from the Ministry, but I'd like to invite the Minister to please come up and update the press about what's happening, especially for the next 2 weeks.
Thank you very much. It's always a pleasure to be here and to update the press and the general public on the current status of issues around trade and industry. I want to use this opportunity to thank the Ministry of Information and Communication and the wider press for converging here this afternoon and to go through a couple of issues that affect trade. One, of course, is the impact of global COVID pandemic on trade across countries. We all know what it has meant. Ever since COVID started, there has been global lockdowns. National borders have been closed. It has affected the strong countries as well as the weak countries. There has been restriction in movement of goods and people across the globe, and that has affected tremendously trade. Our importers are one of the people that have been seriously impacted, and the work which they are currently doing has been immensely challenged over this period we've been experiencing COVID. You will all agree with me that the news is all around that there are challenges with the logistics chain. For instance, the freights for goods, containers particularly, have gone up. Currently, a 40-feet container from China is charged on freight alone at between $7,000 to $8,000. It used to be around $2,500 to $3,000. There has been generally low productivity across the globe. We all know how the Chinese economy was shut down, and even economies at larger scales were shut down, and because of that, some of the goods and services produced by such countries were also low. The impact it had on petroleum products, of course, because those big industries shut down, petroleum was readily available because there was low consumption as well, and of course that impacted on prices. But now that COVID has shifted from China to other countries, you've seen that the consumption of particularly petroleum has also increased, and there has been a global increase in prices of petroleum products. Because of all of these impacts, you saw us drop the price of petroleum products from 9,000 down to 8,500 and then to 7,000. But now the trend is the reverse, and we are looking at the global flat prices and to see what impact that's going to have on the local pump prices of petroleum products. Luckily, we've been able to do a number of agreements with a number of industries, and the local production of certain goods have increased. You can see that we now have 2 major vegetable oil producing companies, and that has impacted a lot on the stability of prices and availability of vegetable oil. We have also seen that an agreement we did with one of the companies that was to be bringing flour into the country, because of the close of the border, purely due to political reasons between Sierra Leone and Guinea. Because we did the agreement with the Sierra Leone flour mill and activated it, he said that even that did not have any huge impact on the prices and availability of flour. As a matter of fact, Sierra Leone is actually providing flour for both Liberia and the periphery is very close to Sierra Leone on the Guinean side. And if you follow the news, you will know that flour in Liberia has gone up. In Guinea too, the prices of flour are up, and even the cost for bread is also up. But in Sierra Leone, there has been some greater stability with prices. With regards to government policy, we are reviewing the industry policy, and the Ministry of Trade and Industry has been able to secure funds from the United Nations Economic Commission for Africa to support the review of industry, because we know that local production is the right way to go, particularly with 2 huge marketing opportunities which we've been able to negotiate: the ECOWAS Trade Liberalization Scheme as well as the Continental Free Trade Agreement. We're looking at the review of policies and legislations on the ease of doing business, and funds have already been secured from the World Bank under the Economic Diversification Project. This is an attempt to see how we're able to create an enabling environment for businesses to thrive in this country. We've also, through all the interventions I've mentioned, seen improvement in the attraction of foreign direct investment. A couple of industries are here. We're negotiating with an industry that is coming to, with a company that's coming to start doing recycling of scrap metals into metal rods, etc., etc. We are also in negotiations with another company that wants to come and do value addition on our iron ore, extracting iron from the ore. And a couple of other agreements are currently under negotiations, and we are very, very sure as we progress industry development, which I told you is the core theme for our economic growth in this country, is gaining traction, and we'll be able to get more and more investment in industry. We are reviewing the cooperative policy, and funds were secured from the enhanced integrated funds. We've gone very far with that, and we have also developed a policy on agro processing, because it's high time we started processing our agricultural produce in this country instead of just exporting them raw. We've got a number of companies through the intervention of government showing interest to come and start processing our timber into furniture, and instead of exporting the raw timber, the Commission on Timber Governance, after its complete formation with approval from Cabinet, already is going to be established to see how our timber is processed in this country. We've got a couple of companies, businesses that are currently processing our cocoa, our cacao, into chocolates and a couple of other products. So, by and large, we're quite safe. You all agree with me that at the start of the year, a couple of market instability were envisaged. Price of water, particularly sachet water, was going up. The intervention of this ministry has been able to bring stability in that area. We engaged all stakeholders. There was a trigger because of the logistics issues around importation of raw materials from abroad. The sachet producers, the ones that produce the market, increased the price of their product. But through the negotiation skills of the team, my deputy minister is here, the directors are all here, who have been able to ensure that the impact of all of this doesn't have huge implications on the prices. We all know that we've become addicted to drinking sachet water, so any increase in the price is definitely going to impact all of us. As I stand here, through all those negotiations, the press statement is going to go out very soon from the Ministry of Trade and Industry. Prices of bundled water is going to remain at 3,500 leones per bundle. Wholesale prices of Grafton bottle at wholesale is 40,000 per 2 dozen pack, and the recommended retail price is 45,000. We saw that people, some unscrupulous businesses, try to take advantage to start selling the 2 dozen pack at 60,000. It has been reversed, and enforcement is going to follow. Suppliers of plastics for the sachets are now going to sell between 26,000 to 29,000 per kilogram, and we're going to enforce some regulatory regime to curb all unlicensed and unregistered water producers for issues around quality and public health interest. The Ministry of Trade and Industry has worked closely with the EWRC and the salon water packeters and bottling organizations, and will continue to dialogue to look at how we resolve issues around markets and the quality of water. I have to give a short narrative on the current situation of particularly essential commodities. We all have seen how much impact COVID has had on the availability and pricing of essential commodities. But for the active intervention and engagement of the Ministry of Trade, we are very sure that we have enough stock of our essential commodities. Rice is available, and in close collaboration with the importers, we're sure that there has been importation that is going to last currently until September, so we have enough rice here. Prices of various brands. Big Joe is currently going at 258,000. The popular butter brand is going at 262,000. The parboiled rice, which is quite expensive a little, is going at 305,000. The Pampa, which is the one that's locally referred to as Fen, is going at 248. Sugar per bag is going at, the 25 kilogram is going at 194. Cement is retailed at 67,000. Of course, Dangote's cement is also retailed at slightly lower price. Vegetable oil per 20 liters is going at $2.60. Other essential commodities, particularly like I mentioned earlier, petroleum products. We've been able to control that. If you take a look at the regional pricing, a liter of petrol in Liberia is going at above 9,000 leones. In Guinea is a little above 10,000 leones. It's only Sierra Leone that we've been able to maintain petrol prices at 7,000 across all products. We will be assessing the trends with the global flat prices, and in case there is going to be any need for an increase based on those assessments, we'll get back to the public. Thank you very much.